All right. Well, I hope everyone's having a good weekend. Nice and relaxing. Nothing too crazy going on my neck of the woods. Let's see. Just been we found a kitten. It was abandoned, so we've been taking care of that. Bless my wife's heart. So yeah, that's always exciting. But all right, let's get into a few things. We definitely have a pretty busy week. Uh, heading into heading into this week. We got more Fed speakers starting out on Monday. Let me drag this over so you can see it. We have three Fed speakers on Monday, all in the morning. Bullard is a market favorite, so we got Bullard at 8:30 in the morning. We've got Bargain and Bostic. Bostic and Bullard, they're pretty typically kind of hawkish, so we definitely want to pay attention to what they have to say. Now, we did have plenty of Fed speakers last week, no doubt about that, including Powell on Thursday, which he didn't really give us much info to work with on Thursday. But most of the Fed speakers that we've seen last week have commented on uh, the need to continue to watch the data. Nothing new on that. We did see an argument being presented about still doing more rate hikes and that the data hasn't given us enough evidence to suggest that they should stop. But we've also seen a few speakers that were saying, okay, they are going to make the case point for a rate pause going into the June meeting. So we've gotten some interesting arguments from both sides of the spectrum so far. So we'll have to continue to see how things develop, especially how the data continues to come in. Of course, we know just basing on the charts that inflation is pretty much dead. You can see it in the bonds, the commodities, and all that. So we know that for the most part, inflation is dead. We know that inflation is sticky in some parts of the economy that we definitely have to pay attention to. But in general speaking, the fight against inflation is pretty much good. So now we just need to continue to see that data come in and show that progress, especially in the housing sector and a few of the other sectors there. But moving forward, paying attention to the futures here, the Fed funds rate, which does track the probabilities of the rate hikes here, the cmegroup.com. You can see here for the June, we did get an interesting bump higher last week. You can see that has toned down quite a good bit over the past weekend. I think there was some commentary earlier today arguing that they are going to make their case point to pause rate hikes for in June. And then what the most curious thing, the market is forward looking. And, there was that interesting question that we had here in the Discord is, why is the market going up? Because we're still dealing with uh, inflation. We are still dealing with a slowing economy, but we got to remember that the market is a forward looking entity. It's currently looking forward to, okay, what is the Fed doing? We know that uh, we're still dealing with quantitative tightening. But we also have lots of dynamics at play and it just doesn't mean that the market doesn't have to absolutely go to the downside. And in fact, if you've been looking for that, you've been playing this market completely wrong because the market's just been screaming its head off, especially with big tech. We're starting to project forward that, even in November, we're starting to look at the possibilities of a rate cut here. So in November, even though the Fed has continuously said, we're not going to cut rates. We're not going to cut rates. The market is kind of, you know, waving the red flag and saying, no, I don't think so. So we're going to continue to watch this as it progresses. It was originally in September, but it still looks like we're having a pause before a rate cut. But you still see that's still a pretty decent size there, 35% for a rate cut in September. But you can see that number jumps up pretty high here in November, and especially in December, where our current target rate is 500 BPS, 525. But then here in December, you can see that it's 48% for a 450, 475. So, it is interesting to watch these numbers change, especially as we get more and more data prints. And we just need to continue to monitor that situation. But yeah, that is what the market is projecting, is that, we're getting to the point where we're expecting rate cuts, and that really, and especially big tech earnings have been a pretty strong catalyst for this market to progress forward. And yeah, you've seen that with Microsoft earnings. Yeah, just absolutely mind-boggling. You could argue, yeah, well, big tech's the main thing that's driving. And yeah, you're not wrong, because if you consider the weightings of the big names, big tech names such as Microsoft, Apple, Nvidia, Amazon, all the big FANG names, they have huge weightings within the overall market. And of course, that is going to drive the main indices higher, which is what we've been seeing. So, we are going to continue to watch big tech for sure. And, is big tech, uh, can we buy big tech, or can we buy the NASDAQ on a dip buy? And the answer is, yeah, absolutely. You can buy a dip buy. And the main question is, well, where can I buy the dip? Watch the hourly time frame, shorten up your time frames a little bit, get, maybe become a little bit aggressive in some of these moves. So we want to pay attention to the, how the data comes in. But like I said, there's a lot of stuff going on this week, just like we did last week. We got some home sales data on Tuesday. And on Wednesday, we get our FOMC minutes. Now, this is the FOMC minutes from our prior meeting. We do not have Powell this week. We do not have Powell after the FOMC minutes. This is just to get a gauge of, is everyone still in agreement on where they want to, maybe push the rates to, or even pause the rates. You'll get a little bit of better insight. Usually, you get some aggressive move to the upside or downside, and then it just kind of calms down. But this will definitely be a market moving event on Wednesday at 2 o'clock. We definitely want to pay attention to that. And then on Thursday, we got, a pretty busy day here on Thursday. We got the jobless claims, we got GDP, we got pending home sales data, we got another Fed speaker, and then we got core PCE. Core PCE is definitely going to, well, that's on Friday. PCE data is definitely what we need to pay attention to on Friday, because this is, what Powell has told us. This is the big economic reading that they're watching to gauge where things are shaping up. So we definitely want to pay attention to the PCE reading. The previous reading was 0.1%. So we'll see, 0.2%. And we just need to see where things go from there. So PCE on Friday is going to be very important to watch. If it comes in hot, that's probably not a good thing. So we want to continue to see the PCE cool down. And then, of course, we got a slew of other things. The Michigan consumer sentiment final reading for May. And then we'll just kind of go from there. So yeah, busy economic calendar week all together that, we'll just have to take in and day out at a time. Who knows what the Fed speakers say, but for the most part, we have a general idea that they're, seemingly in some agreements that they want to continue to see data come in, and, we'll just take it, as the data comes in. Yeah, simple as that. Tech is tied to the Q. Yeah, tech. When you think of the QQQ, the XLK is the heaviest weighted sector within the Nasdaq. The Nasdaq 100 is your pretty much your tech. So yeah. Speaking of that, and then when we move forward, not on top of that, not only including that, we have tons of fun and exciting earnings. We got the big one for next week is going to be, everyone's eyes is going to be on this, is definitely going to be a crowded name to look at, and this is Nvidia. Nvidia's only like 8% off of its all-time highs. This thing has been absolutely screaming, and you're going to see a lot of charts like this where you have this nice consolidation period, and we're trading sideways, which seemed for forever, and we finally got that breakout move last week. And Nvidia has just been one of those names that has just been absolutely resilient, and you can see it in social media. Well, why is it trading super high valuations and blah blah? It doesn't matter why. It doesn't matter why. Price is what pays. Don't try to spend forever pulling your hair out and reading into all the details, the fine details, trying to figure out why something is moving. The most important thing is this making higher highs, or is it making lower lows? And the question is, this thing is in a clear uptrend and is just been an absolute beast. At the beginning of the year, this thing was trading at what, $140. It's now above $300. So, while people were there scratching their heads like, well, it shouldn't be doing this because it's valued at blah, blah, blah. It doesn't matter. What matters is that this thing continues to make new highs. So, do you want to buy it when it's up here? And that kind of brings me to the point. So, my answer is, no, not really, but it is exhaustion risk. Buyers are at some point going to get tired. They're going to tire themselves out, and we are going to get a pretty, hopefully a good pullback, because a lot of these things have had such great moves that you can't get into all of them. So you want to, get your feet wet in some of these names. So, and when you look at names like Nvidia, yeah, I want to. Anytime this name has pulled back to the daily 21 here, this is your white line. My pen is really laggy today, so I'm probably not going to be able to use it. Anytime you do get a dip to the daily 21, that seems to be where buyers seem to step in and buy the dip. And you can see it here all the way down to really since February. Every single time that we've come in to the daily 21, we've bought the dip, we've ripped higher, retraced back in, moved higher. That's probably about a 10% move there. Retraced in back to the daily mean, reversion of the mean, and we've just pushed on higher. So Nvidia continues to be quite impressive. Let me make sure I'm back in the chat room here so I can read any kind of questions. All right, we're good. All right, so now let's start off things with the SPX. SPX is this is your S&P 500. You can use SPY. If you're using SPY, just divide by 10. If you're using the SPX 4200, I mean, this looks great. The main issue here I'm looking here on the SPX is that we continue to see really a decline on the histogram on the weekly chart. And that's really the one thing that's kind of like making me scratch my head, because usually you want to see that momentum continue to push on forward. We're still in a daily squeeze here, and the signals overall look pretty decent, but we're just not getting the lift that we should see. But like I said, we're at an interesting impasse where 4200, 4180 was a pretty big deal to break above on Friday. We did have a butterfly trade here on the SPX on Thursday, and I was hoping to swing that, but we ended up hitting 4200 that day. And then Friday, we came up to 4,200, and we just kind of ping ponged around between 4,200 and 4,180. So on the SPX, what I'm looking forward to is a continual hold of 4,180, and hopefully we can get a push to 4240. That's going to be my next level. Once we get above 4240, I'm looking at 4325. So there's definitely some air pockets that we can progress forward to, but those are the key levels there on the SPX. If you want to translate that to the SPY, we can take a look at that, and you're going to see the same levels here. Let's see, 418 really to hold. If we hold 418, looking for a move to about 422. Now 422, that is a small gap fill to the upside here. That's from a gap down from last August. And we didn't quite fill it on Friday, so we still got a little bit of wiggle room here. But then your next area to hit is going to be 430. So if we do get a pullback, you're going to want to see the SPY hold at least this consolidation break. But you could argue that this is possibly still in consolidation, but we'll have to see what tomorrow is looking like, and hopefully we'll have a better understanding of what the SPY wants to do by Wednesday for sure. Moving on to the Nasdaq continues to be running on full throttle gears here. Just pushing above the 50% retracement off the all-time highs. And we came here on Thursday, and Wednesday really, and I thought, okay, well, maybe we kind of stall out here, get us a retracement to the daily 21, and then push on higher from there. Nope, momentum continues to push things higher. Big tech continues to take the charge. Semiconductors have been absolutely crushing it. And we'll take a look at those as well. But the QQQ, yeah, it's a little bit interesting here because when you pull up, your ATR bands here, you can see that we're at +3 ATR, and this is very rare. This doesn't happen a whole lot where the Nasdaq, the index itself, usually see this on individual names that are just going straight parabolic, where they're trading at +3, +4, ATR for a little bit, and then they get a retracement. You don't necessarily see this a whole lot in the overall indices. So what we're looking for here is, I'm looking for signs of exhaustion risk, and just buyers getting tired, just like where we've seen here on the weekly chart, where sellers just they tire themselves out, they get tired of selling, they just run out, and they just run out of steam, and then the buyers finally take control. So what I'm looking for here is some early signals here, especially on the hourly chart, maybe even the 30-minute chart, to see if we get some move, not necessarily back to the daily 21 at 325, but maybe even just the +1 ATR, which would be about 327 levels, and then move higher from there. And that's really just what I'm thinking. This has been an aggressive upside move, and yeah, things could use a pullback, if we can get one, and we know we'll get one, it's just a matter of time. But we don't want to try to front run this thing, because you don't want to step in front of a freight train. You just want to, play, the ebbs and flows of everything and get a good entry uh, on your stocks. You don't want to buy things that are +3, +4 ATR. You want to buy things when they've reverted back to the mean, get a good dip buy, and then make a push forward with, especially since we got Nvidia earnings coming up. Are we flipping from bear to bull? Heavens no. Just because things are dipping doesn't necessarily mean that we have switched from bull to bear. What we are doing is we are patiently waiting to get better entries. You don't want to, if you buy something right here on the Qs, or just in any stock in general that's super duper extended, you are taking a pretty sizable risk, because you're saying, okay, I'm going to buy here at 337. Well, you need to go in understanding that, if we do get a pullback, your risk is, 324, and say if your target is, 340, you're risking what, 11, $12 to make $3. That's a terrible risk to reward. So you want plenty of meat on the bone. So I'm looking for a dip here to buy into and play the continuation move back to the upside. So yeah, we're still very much so bullish, by all means, especially on Nasdaq. Definitely bullish on tech in general. Let's see, Microsoft is one of the highest weighted names out there in the Nasdaq. And let's see, what is this on that? There we go. So as far as Microsoft goes, it's not as crazy extended, but I would like to get a pullback here. Maybe even to the 310 level. Even better if I get a pullback to 306. That would make sense. Or heck, even if you want to do the hourly chart here, let's pull up the hourly chart. And let's maximize you, and I'll zoom, and let me just kind of make this chart make sense. There we go. So the buy zone here on Microsoft would be, you could do an aggressive buy at the hourly 21, or you can do a little bit more of a conservative buy at the hourly 50 for me, just based upon, the system that I use. But, Microsoft continues to be pretty darn bullish here. And, we haven't seen any cracks that this thing is going to be turning from bull to bear. But, it is hard to nibble on these things. And, if you bought here, let's see, back at about 302, I mean, you're making 320. That's $18 on the move there. So, yeah, just looking for things to give us a little bit of a pullback, especially for tech. But there are definitely plenty of good things out there that are still worthwhile. Let's move on to, let's see. So we talked about the Nasdaq. We just need to wait and see if there are any signs of evidence of exhaustion risk. And let me see. Let me get rid of these ATR bands so you don't see a bunch of squiggly lines. I usually don't have them there too often, just to see where things are. Moving on to the IWM. The IWM, this is where your regional banks are. Yeah, nothing too crazy going on here. It's still trading between 180. You can see it had a pretty, rough day. We gapped up and then we just kind of faded on down. So until it gets above 180, I'm not too interested about it. But the good thing is, especially with the KRE regional bank sector ETF, is that we started to see some inflows coming back in, which is it's a very positive sign. I believe Schwab came out with a report saying that inflows are good. There's nothing to be alarmed here, and that was really good to see. So definitely keep paying attention to those regional banks. If the financials can ultimately, turn things around here, but it is going to be a little bit tough with the current economic conditions with the rates here, and these regional banks unable to compete with some of the other products being issued by some of the bigger banks. It just makes things a little bit more difficult as far as the regionals go. But we had this big breakdown here on a technical standpoint below 41.28. You're getting a little bit of a move back up to retest. And the question, usually, what we say in technical analysis is prior support does become new resistance, or prior resistance becomes new support. So if we do get a push back up to 41.28, is it going to act as resistance and we make another leg lower? So we do definitely want to watch the KRE in general. That's PNC, Schwab, just to name a few. The XLF here, this is where your big boys are. Yeah, this is more, I'd say it's definitely a lagging sector. You can still see that you are trading below the daily 200 and also the year to date VWAP, and also the all time high VWAP, which sits at about that 35 level. So as far as the XLF goes, we do have the 21 crossing above the 50. Yeah, that's a good sign. That's a good start at least. But we really need to get ourselves back above the daily 200. You want to get back above that bull bear equator that we like to call it, and you definitely want to get above that. So that is going to be step number one. Can we get above this 30? We'll say 34 level. If we can get above 34 level, great. Then what can we look at? Well, we definitely want to pay attention to the main players uh, of the XLF, and that is definitely going to be let's see, that is going to be JP Morgan. Want to see these guys. Let's see, I don't want the 3X. Where is my sector list at? For some reason it's not pulling up. See, it's always important to, when you look at your sectors, look at your highest weighting. So you got JP Morgan. This one's, it's holding steady. You want to see JP Morgan. I'd like to see it above 144. That's going to be your big level there. We came up to that level, was about 2 weeks ago, and then we just failed, and maybe we're getting a little bit of a reset. But we did play Bert B last week, or past 2 weeks. It was a swing trade. We had a good swing trade on Bert B, and this thing has absolutely been a fantastic trade. We had a breakout move above 319.50. We hit our target of 330. We actually came back in to retest this level, and then we shot back up. So this has been a really easy, fun trade to be in as far as Bert B goes. So if we do get a pullback, you see you got a nice little inverted hammer there on Berkshire. If we do come back in some, yeah, that could be a very good buy the dip opportunity to either load up on some shares or maybe grab some call options or do a put credit spread on this one. Just pay attention to your OI. So, you want, plenty of participants with you. But Berkshire B looks fantastic as far as the XLF goes, but there is, one name out there that is kind of troubling. And this doesn't have a huge weighting on the XLF. It's more so, I think it's only like a 2% weighting, and that is the Morgan Stanley here. You can see Morgan Stanley is really just getting beat up here for some reason, and you're in a pretty much downtrend, and you just can't seem to make any progress. We came back up to the daily 21, rejected pretty hard on Friday. So I'm looking for this break below 81.72 for at least a move back down to 80. Now, I know it's only a 81.72, but it's options chain. does do pretty good here. So I'm definitely interested in possibly playing some downside here on Morgan Stanley, especially if we see some weakness in the overall XLF sector. And let's see, I'll give you another one here too. Visa is on the long side of the watch list here. If the XLF does decide to uh, start to play fun games with the market bulls here, and maybe we see some sector rotation. But Visa, I'm looking at a break above 235.50 for at least a push up into 240, 241 area. So Visa continues to set up pretty nice here. You do got a daily squeeze. You got a bullish positioning on the oscillator. So everything's looking pretty darn good here. And, white is stacked over blue, blue stacked over red. So you have structure. We got the squeeze. So that's just a positive. We got momentum. And yeah, decent setup here on Visa. So if the XLF does decide to try to play games here and push to the upside, then yeah, I'm definitely wanting to pay attention to Visa and Berkshire B. But if things go to the downside, I'm definitely playing Morgan Stanley. So that's the way to do that when you're looking at these sectors, and you're playing. You want some bullish names, you want some bearish names, and you got three of them right there. You got Visa, Berkshire for your bull side trades, and then you got Morgan Stanley for your downside. But all right, so moving on to the XLK tech sector. Obviously, your big holders here are Apple and Microsoft. Now, the interesting thing here about Apple is, it hasn't really been, you know, firing on all cylinders, so to speak. Well, I say that, but Apple's like 4% off of its all-time highs, which is absolutely mind-boggling. But Apple, we had this interesting breakout move, consolidation break to the upside on Thursday. We just didn't get a lot of follow through here on Apple. So as far as Apple goes, if we do come in, I want to see this 174.30 hold and then push back up towards 176.15. And we also do have a here, I'll bring it up on this chart because I have some of my drawings here and there and everywhere. Apple is a little bit clearer to see here on trading view sometimes. Apple here, you have a nice support. Well, it was prior resistance. Now it's acting as support, hence the green arrows here. But you can see here where I've highlighted these circles here, every single time that Apple has retraced back down to the daily 21, we've shot up higher. And on average, the dip buy has given us a 6% move back up to the upside, with this move from March to the end of March was the biggest. But every single time that we've come back into the daily 21, on average, we've gotten a 6% move higher. So watching Apple here, if we do come in some, I'm watching the daily 21, and I'm also watching this prior resistance zone, which are these pink lines. If this zone acts as new resistance, which it has shown evidence of, to push on higher. And then you could say, well, there's also the case that this is one giant wedge, and sure, that is the case. But if you come here to the, let's just delete that. Let's just delete all the drawings here. So let's say you come over here to the weekly chart and say, okay, well, is this one big old giant wedge on the weekly chart? And yeah, there's the argument there for sure, no doubt about that. But we need to see the evidence. So you need to see, at least a break below 172. And then if you do get a break of 172, you just mark your levels here at 165. And even your weekly 21, a reversion back to the weekly 21 would put you all the way back to 160. But of course, that is a long ways off. We still got plenty of work to do. If market bears want to shove things back down to the downside, sure, they can, but they're going to have to really dig their toes in and make that happen. So, we definitely want to pay attention to, what's interesting. I did see, this is just a side note. It doesn't really mean anything. I did see that the market cap of Apple is larger than the entire market cap of the UK. So there's that. It's kind of funny. Yeah. All right. So Apple, yeah, I'm paying attention to Apple. If we do get a dip all the way down to the 21, that's a great buyable dip. and you can push higher from there. So I am looking, and what's good about that is that it also gives you a clean level to work with. So your white line here is your daily 21. And that's also giving you a retest of the support level down here at 170, 75, 171 zone. Yeah, that would just be a very nice confluence of area to buy a dip and push higher. So I'm definitely liking the looks of Apple, especially if we can get a dip buy. But on the other hand, this market is absolutely resilient. And if Apple does decide to kick it into high gear, like some of these other names have been doing, then yeah, I'm looking for a move. To 176 is going to be the first step. Once you get above 176, then you're talking about a possibility of going into an all-time high breakout, which would be absolutely mind-boggling. And then if it does go for an all-time high break, is it going to reject hard? And if we do reject hard, that would give us, maybe it's a double top. And then we have to, figure out, where are we going to move on to the downside. So, yeah, Apple is very, very interesting. I am liking this setup, regardless, market bull, market bear, whichever side you want to play here. But yeah, I'm liking the looks of Apple. Boot says Visa has a weekly, daily. Yeah, there's squeezes everywhere for Visa. So I'm really interested into where that one wants to be. Let's see. So there's Microsoft, there's Apple. Let's move on to the communication sector. The communication sector has actually been one of the leading sectors and one of the strongest sectors out there this year, especially thanks to names like Meta. Meta has been on an absolute rip since the lows here at about 88, and you're trading now at 248, which is absolutely insane. They had some news last week where they were going to be introducing a text-based social media platform to compete with Twitter. Let that one sink in. So yeah, we'll be on the lookouts for any development from that. It's just kind of funny that they came out. You have Facebook, right? So what's the point of Facebook? Facebook's mainly, every time you get on Facebook, you see more ads, it seems, than you do, posts from people. But yeah, Meta continues to base out here. I'm looking for a break of this 248, 248 to really essentially push higher into maybe even 250, 252. And then of course you got the big level here at 270. That's going to be a 618 retracement. Can that happen? Sure. But I'm also watching for signs of exhaustion risk, especially on these FANG names, because FANG has absolutely been rip roaring. We have this, failed attempt to push higher on Friday. So I am going to be looking for a move here. Let me go ahead and remove that so it's not clouding everything. So if we do break below Friday's low as at 243.30, then yeah, I'm looking for a move at least down to 240 and give us a retest. But it's so hard to play the downside on really just anything, the overall market in general. If you've been trying to play puts, they buy the dip aggressively. Sometimes at places at thin air. I've been watching some of these smaller time frames, especially intraday on like the SPX and SPY, and they just, once things go on a dip, they just buy it all back. So if that's not the signs of a bull market, then I don't know, the resiliency here, especially with on tech. So keep an eye on Meta. I'm also liking, if you want a smaller cap one, here's CMCSA, Comcast. Yeah, Comcast, is sure not everybody's favorite company, I guess, but look at this, watch this move. You got a good trend here. You need to break above 42. If you can get a break above 42, there is a small gap here to play with. Let me see if I can pull that. If I'm trying to zoom in as best as I can, I guess it would help if I just do maximize. All right, let's go to auto zoom. Let's zoom in here. All right, so let's see. Let's mark that level here. CMCSA. Let's see. Gap fills at 42.43. So if you do break above that level, just look for a push towards really this 46. Let's see. No, not that area. Here we go. There we go. 42.43. Look for a push towards about 44.50. and we'll keep an eye on that. So that one's an interesting name. It's got a decent little trend here. The oscillator is looking good, and you got the right position. You don't have a squeeze, but that's all right. Let me see here. Do I just close this? No. Not detach. I want to. Where am I at? Where's my detach? I can't remember. Well, how do I get this to go back? I'm having a duh moment here on my charts. I may just close it. Let's see. Let's do. Can I do that? No, that doesn't do anything. Okay, well, I done messed up that for some reason. I don't want to. I just want it to minimize. How do you get this thing to minimize back out after you maximize it? That's so annoying. All right, we'll close it. How about that? And then we'll go back. No, that's the intraday charts. Intraday charts. And I guess we can use that for now until I get back this. Let me see if I can pull it back up here. Is this it? Yep, there we go. All right. There we go. Sorry about that. We got there eventually. It just took us a second. All right. Let's see. So looking at communications. Oh yeah, Google. Of course, Google been an absolutely rip roar here at the 618. And here's your exhaustion risk here. You see that hammer candle? Now we've pushed incredibly up to the 618 at 125.50. This has been an impressive run by Google. And you get an inverted hammer like this. This just tells me, okay, buyers are tired at this point. They tried to buy it up and they got met with aggressive selling pressure for really the first time since we've been moving higher on rather large volume. The daily squeeze is fired off long. It's ran for 1, 2, 3, 4, 5, 6, 7. Usually the average amount of bars there. And yeah, it could just use a cool down. Now, how long does this play out? Well, when you're playing a shooter candle, it could come all the way down to 120. You can watch your 1 hour chart to see if it comes down to the 1 hour 50 at like 119. This doesn't mean, the trend is over for forever. This just means that for now, at this cycle, at this point in stage of the cycle, that, buyers are tired. Let's see if they can gather themselves back up and push on ahead. So for Google, I am looking to see if we get a little bit more of a pullback here, a deeper pullback to maybe even the 120, 119 levels. So that's what I'm looking for on Google, especially. Let's see here. Okay, let's go ahead and just go into some of these commodities. Let's check out crude oil. Let that load up. Crude oil energy sector has been lagging completely. I don't really have an interest here in crude oil or nat gas. We call nat gas the widowmaker. You don't play nat gas because it can absolutely, just absolutely ruin you. So crude oil, still not doing anything here. You can take, sure, but what about Oxy? Yeah, well, Oxy is only staying up because Warren Buffett keeps buying the dip, so to speak. This thing's not dying just because, every time we get this thing looks like it wants to roll over. And every time it looks like it wants to roll over, you get a report that's saying, oh, okay, Warren Buffett bought another 2 million shares or something stupid. But yeah, Oxy doesn't look too good. I'm staying away from it. ZOM, I don't care who's in it. Chart tells me to stay away from it. ZOM, this is messy here on ZOM. You had that fake out at 119, 120 zone, and you absolutely crashed all the way through, all the way back down below the daily 200. How gross is that? You do got this interesting weekly hammer here on the 50, but I'm still not interested in buying it, not until we get a little bit more clear signals from crude oil, and especially nat gas. One of the big sectors that I am looking at is copper futures. Now, copper is generally a leading economic indicator, and you can see here last week you had this nasty breakdown. Was 2 weeks ago. Nasty breakdown. Bear flag shaping up below 3822. And yeah, I'm looking to see if we do happen to get a push back up, look for that 3822 level to act as resistance, and you shoot lower. So copper, if you are a market bull, this is something that you don't really want to see. And you want to see copper push ahead. So you have this mixed divergence here on copper. So copper is just saying, not so fast, guys. Another area that is showing some concern here is the HYG. It's the junk bonds, the junk of the junk. If everything's moving in unison, you want to see this push on ahead. But HYG is giving us, and not so fast signals either. So, watching the HYG, copper's giving us a headache. If you look at the equal weighted ETF, the equal weighted S&P 500, which is the RSP, we can see that it's not quite ready yet. It tried to get above the daily 200, couldn't. Ideally, I want to see the equal weighted ETF trading above 146. You got a daily squeeze and some neutral signals here on the oscillator. But yeah, and if you look at the Dow, if you read about Dow theory and your study of the market, you'll know that if you want the Dow to move higher, you really want to see the transports push on higher. And so far, we're not really seeing that. And if you look at some of these transports, such as UPS, which is on watch for some downside, you can see that you got a little bit, especially some weakness off of earnings. You broke down below 175. You've kind of stabilized since then. You had dividend payout, but UPS does not look too good. Take its competitor FedEx to compare the two. FedEx looks great. If transports want to go, I'm watching FedEx. FedEx looking for that break above 235.81. But if the transports want to, you know, continue to sleep and not move at all, and the economy, we continue to see economic slowdown, then UPS, I'm looking for a push down on UPS, and we got some wiggle room here to about that retest of 155, which here on the weekly chart you can see really clear here that 155 mark has some pretty decent support here. So watch UPS within the coming days or the coming weeks to see how things are shaping up, and also watch FedEx. Are the transports moving higher? And if they are, that's great for the Dow components. That's great for the Dow to finally base out and really just kind of break out. And the Dow was, a light in the tunnel here for the market at the beginning of the year. And since then, it's just been trading nonchalantly sideways. Not much to see here. But if you want to see the Dow components move, pay attention to the transportation sector to confirm that move. And then pick out your individual names like UNP, UPS, FedEx, etc. Got a question, Fuzz. If you use fib retracements, how would you use it? Now, remember, fib retracements are a retracement of the prior move here. So if we take a look at, that's a good one, Google. Let's say Google. There's many different ways you can use Google. Fibonacci retracements. You can use them on your larger time frames, your smaller time frames. We use them in opening range breakouts. So if you take a Fibonacci retracement here at the all-time high at 150, 155 and draw it all the way down to its low at 83.71, you'll see that we bounced off to the 618. Now the levels that I use is 382, the 50, and the 618. Those are the key ones that I use. If you break above the 382, most likely you're going to go to the 50. If you break through the 50, most likely you're going to go to the 618. So here on Google, we absolutely crushed through the 382. You can see how the 382 here on the daily even acted as pretty clear resistance until we started to break out. Look at that breakout from the 382 on Google. You hit the 50 with no problem. That's where we kind of stalled out a little bit. And then finally, last week, we broke above the 50% retracement and hit the 618. And that's where you get that shooter candle and suggestions of buyer exhaustion. So you want to use price levels first, and then your indicators, such as volume, if you're using moving averages, etc. Always look at the price levels first and then use your other tools as secondary levels. So, are you coming up to the daily 200? That's going to be an area of resistance. A lot of market participants are going to be using those levels. And if it's an obvious fib level like we have here on Google, such as the 382 and the 618, those are going to be obvious levels, not just for other traders out there, but also, those high frequency algo traders out there. They're going to be easily uh, seeing those key levels there. So I like the 618, the 50, and the 382. But if you can also use that as an intraday tool. If you have a good move to the upside, draw your fib levels from the low of the day to the high of the day. And if you're having a trend day, you want to buy on the pullback to the 382 and push on higher, and then you have a stop below. That's how we use fib retracements. If you have any questions on Fibonacci, you definitely want to, let's see, you want to check out Carolyn Borden. I think we have that in our library. Carolyn Boroden, Fibonacci Strategy is her book. If you want to read more about Fibonacci's, that's what you want to check out. She does have a YouTube. I haven't really watched her YouTube. I don't know if she's super duper active, but I do know I think she's also on Twitter, but I don't know how much work she's doing. She does some work, but not a whole lot. But yeah, check out her book if you want to. That is the Queen of Fibonacci is what she calls herself, which rightfully so because she's earned that title, no doubt about that. All right, so moving on. Let's see, it's 9:45. Let's go ahead and take a look at a few names that I'm watching. I've already discussed some of the financial names: Morgan Stanley, Visa, Berkshire. Tech names, I'm definitely going to be paying attention to big tech. You got Nvidia earnings this week. If anybody wants to take any guesses on how many times they say the word AI, feel free to place your bets. And then we'll see how the market reacts to it. Let's see here. We talked about, let's throw out this one. Oh, I almost typed in chat. Let's go over to DE John Deere. This thing is absolutely beat up. This thing had a big gap up move off of earnings, but you can see where that gap up absolutely failed and we pushed on lower. I'm looking for a continuation move off of that earnings report. Found it. Nice. A continuation off of that earnings report. So if we break below 364, 365, 364, yeah, I'm looking for an additional move lower there on John Deere. Uber is interesting. This is actually a pretty decent setting up. You can see how it's not really too far gone. It's had a great move off of earnings. It's traded sideways for a good bit. Friday, it did absolutely nothing. If we do get a push above Thursday's highs of about 39.50, easily looking for a move to about that 42. Let me zoom out here. Make sure I'm giving you the right level. Let's put this at 2-year. Yeah, you're easily looking at a move towards 41 first and then 43. And we actually saw some interesting call flow here on Uber. They're buying up the 39.5 calls for next week. So yeah, pay attention to Uber next week if we get a move to the upside. Let's see, I talked about UPS, Visa. Let's go to LRCX. Lamb Research has been an absolute beast mode. We had a put credit spread on this one, and we took profits off of that on the move up. You can see that on Friday we had an inside day here. Just another sign, maybe we just need to take a rest, and then we'll move on down. If we do get a dip buy, fantastic. I'm looking at for that. I'm also liking the looks of Broadcom. Broadcom breaking out of this tight consolidation level that we've been looking at for a while now between 600 and 650. Finally got that push to the upside. You tapped all-time highs and closed at the highs, and this thing has just been an absolute beast. You can see that daily squeeze, all those red dots finally firing off. Yeah, fantastic move by Broadcom. If you get a dip buy on that, it looks to be like a buyable dip. Lord Business says puts on BBY. Oh, for earnings. Yeah. Yeah, earnings. Retail is going to be interesting. I'm kind of salty about this one because I was in Best Buy puts and I actually got stopped out. What was that, Wednesday, when the market went absolutely bonkers? Yeah, we had a move all the way up, had a daily close above the 21, and it looked like we were going to tap the daily 50, and this thing was just going to have a continuation move all the way to the daily 200. That's what I was expecting. This thing was going to have a continuation move, and then we had that inside day on Thursday, and then Friday it just kind of rolled over. So I'm a little bit salty about Best Buy right here. So if it does want to push on lower, good for her. Even have this nasty shooter candle going into that earnings report. So yeah, I definitely still agree with my thesis. It's just I got stopped out, and it's just the nature of the beast there. With the market, sometimes you just get stopped out, and that's what happened to me. But yeah, Best Buy, if you look at it, even on this huge volume node here on Friday, you still got the daily squeeze. You got the bear signal still intact here. Uh, yeah, this thing looks like it wants to roll over and push down towards 67 to retest that 67 support level. So I like the looks of Best Buy still. I think it's still a good play to be in if you want to try that one out. Amazon broke AF is asking about Amazon. Yeah, the XLY is been one of those sector leaders in general, and that's mostly thank you to Amazon, not so much to Tesla, but Amazon has been really strong, really positive. You broke out of this 114 level here, and now you kind of hit your head a little bit on the next resistance level at 119, 120 zone. You see here on Friday, this is a very uninspirational candle here on Friday. Just another sign out there. Maybe there's some evidence out there that, maybe we are at some sort of buyer exhaustion where buyers just need to, catch their breaths a little bit and see where things want to go from there. So if Amazon pulls back in further, I want to see it hold 114. This was our breakout level. If we hold 114, yeah, that could be a decent dip buy. If we pulled back further to the 21, that's fine there. But the overall trend here is still higher, and looking forward to Amazon to continue the trend to the upside. But as you can see, when you compare it to other FANG names out there, it's not as inspirational, so to speak. Amazon is still 40% off of its all-time highs, whereas you got Apple like 4%, Nvidia's like 8% away from its all-time highs. Meta's been very strong this year. Communication sector has been pretty good, but Amazon, it's got some work to do, especially in the current economic conditions that we are in. They've also had some of the most layovers or layoffs, not layovers, layoffs this year. And yeah, people are being a little bit more budget tight when it comes to expenditures. So Amazon, still a bullish name. You got structure still intact here, but so if we do get a pull down, look for 114 to hold. If 114 holds, then look for that move to at least the 122, and then if 122 can, if we can bust through 122, look for a move to 130, which would be a retest of your weekly 200, which would be another interesting spot for things to retest. But yeah, Amazon, a little bit interesting here. I'm looking for a dip here if we can get one. Target, why is Target getting hammered? Because their earnings, I guess. Yeah, Target, Walmart, and they also said they are getting hit by a lot of thievery, I guess is the right word. Shoplifting, yeah, thievery, shoplifting, thievery. I guess that's the same thing. Shoplifting, yeah, the Targets, and we my wife and I, we bought a, we're going camping next weekend, and we had to go over to Target to get a few things, and it's self checkout, yeah. um, I don't get the hype. I don't know. I don't get the hype for Target, to be honest with you. They get you walk in and they get you with that, like, those little goodies at the beginning where it's things like $5. Ooh, get yourself a little goodie thing, and it's all like trash. Someone's wife is probably listening. How dare he? Yeah, Target, it's in the downtrend. I would have to read into the fundamentals, but basically based on the technicals, you got to squeeze negative positioning on the oscillator and negative thrust. It's not looking too good here for Target. And when you compare it to Wally World, uh, and we also had retail sales data last week, if I'm not mistaken. I think that came in a little weak, and it's just the signals of a weakening economy as well. We know that the economy is slowing down. We've seen that with both the sentiment readings. We saw that with the retail sales data. But when you compare the two, Walmart, Target, Walmart looks a little bit better. And I would argue that names like DKS, Dix was looking pretty strong, but Dix is kind of rolled over. You have a little bit of a softening on this, and it looks like it's going to continue to move on lower. You do have earnings coming up, and it doesn't look like it's going to fare too well, especially with the weakening economy and people not spending as much on leisure, I guess. Let's see. ASO's another one. Academy Sports, same thing here, rolling over. You got that going on. So the entire sector itself, the entire retail sector is just getting hit. Let's see who's another one. I got Target. Let's check out Dollar Tree. See, Dollar Tree is not doing too bad. That could be a rotation. He's got earnings coming up as well. This was not too shabby, actual. When's their earnings? Tuesday? Yeah. That was not too bad. So I like puts on Target, and I like the possibility for a long on Dollar Tree. Dollar Tree might be a little bit better. What about Dollar General? That was not too good either. May just avoid the entire sector, since I don't like trading Walmart because Walmart's flimsy and wackadoo. This thing can't break out of 150 to save its life. So we'll see. Yeah, but Target looks pretty weak if I'm looking at them all. Target looks weak. Dix looks weak. ASO's kind of having some trouble here coming into earnings. So you got some interesting KSS, Kohl's. Yeah. What about Macy's? Remember when Macy's was the nature of the game not too long ago? Kohl's, yeah, this looks like booty. Look for that breakdown below 18.15 on Kohl's. Look at that weekly setup there. It looks nasty. Bearish signals all around here, but it's a short squeeze. Get out of here. Every time you've gotten to move to the daily 200, consolidation, move to the daily 200. We're squeezing. We're going to the moon. Nope. Look what happened. We're going to the moon. Yeah, the moon on the other side of the hemisphere. New lows. What about Macy's? That's right. Fuzz's do not trade list does include Walmart. Also have family members that are in management in Walmart, so I'd rather avoid that situation. Macy's. Yeah, Macy's. This looks terrible. dumpster out here. GPS. Yeah, that's another one. Lord. Like, why are we? Yeah, this is just downtrend nastiness. Don't trade this. Put your money to work on GPS or Kohl's, or would you rather put it in something like, I don't know, AMD? AMD. I mean, microchips, LMU, which I think there was. I saw that. Who said something about LMU? Felton. Felton had mentioned that LMU had some news with China overnight over the weekend. So we'll see how that plays out. I love this breakout on LMU. This was a nice consolidation break above 65, and you had a good hold on Friday as well. I'm definitely looking forward this thing to pushing on higher. Uh, but yeah, if we do got some negative news, if we do get a dip, I'm looking for 65 to hold. If 65 doesn't hold, yeah, that could be a fake out move here, and we just move lower. So I definitely want to pay attention to some of these uh, semiconductor names. Let's look at ON. On is looking pretty good there. Any semiconductor, just take a look at all your semiconductors. You'll get pretty much the same pattern. All right, I've given you pretty much everything I got. So I'm watching Apple, Nvidia earnings on Thursday. Watching John Deere. Let's see, watching Cat as well. If Cat wants to also be weak with John Deere, watch for the break down below 207. 207, you got a nice gap fill to 200, 199.50 level. So that one's on watch. I like Visa to the upside. I like Morgan Stanley to the downside. FedEx, LRCX, looking for some dip buy opportunities. And that's how I'm going to play it. That's how we're going to play this market. Everything looks pretty strong. We just need to get a better feel if, we do get a dip buy, or if there is buyer exhaustion, where are things going to hold? We got a lot of economic data this week, and we have some interesting earnings at play. So a lot of interesting stuff going on. All right, any ticker requests y'all want to take a look at? I'll open it up to use. I appreciate it, NP Bull. I appreciate you, man. DraftKings, yeah. Yeah, DraftKings is doing pretty interesting. Over to Kings of Draft. Let that load. You actually had a pretty good move here off of earnings. Nice breakout above 2162. You can see I got my levels there. Let's see, we can probably delete that because we're not looking for downside. We'll keep that one as a support level. But yeah, beat up name, of course, not what it used to be. It used to be trading in the 74s. I remember trading this thing years ago, and it was actually a lot of fun. And then we got the downside, and the premiums don't move as much. But yeah, nice little move here off of earnings. You got extended, and look what you did. You pulled back to the daily 21 and ripped higher. That's a good sign there that things are still pretty strong here. You can see that we had this first move to the upside, pulled back to the 21, pushed back up, came back in, retraced to the 21, gapped up off of earnings. Now you retrace back to the 21 for the third, fourth time, and now you're looking for a move back to the upside. So as far as DraftKings go, I like this level here. 2470, we'll say 2475, and this is on the weekly chart. That would give us a move to 28. So that would be our next levels there on DraftKings. And then you have a clear stop below the daily 21. So you got a good clean levels to work with here on DraftKings. So watch for that break above 2475 to a push towards 2728 even. It might take some time. Usually DraftKings is kind of a slow mover. I think it's weekly. Yeah, its weekly ATR is only like 2.5. So just kind of be patient with DraftKings, but it's a nice trend. You got good structure. You got good momentum. I don't have too many complaints here for DraftKings. And you got the NBA playoffs going around. Decker? Oh, it's not Christmas time. Deck. Oh, yeah. Interesting one here. Ooh, I like it. Deckers, is it a dip buy? Okay, so you had this nice breakout above 451.50. That was your all-time high breakout on the weekly chart. You pushed all the way up to 500, and now you're coming back. Now, what I like about this weekly chart here is that you can see that you closed above that 450.50 mark. Now, when you come over here to the daily chart, you got earnings coming up. You got an early warning here saying, hey, heads up, might kind of break, and you got to close below the daily 21. So for me, this would be just kind of wait and see, especially with earnings coming up. But if you want to play this level, this 451.50, you should be fine. What I'm saying is this is a clean level to work with. Obviously, if you close below it, that's generally not a good sign, and you could just roll over from there, even possibly all the way down to this 400 level, which would give you a retest of the daily 200, especially with earnings coming up. We had that retail sales initial data come out last week, and it was just kind of wonky. So yeah, this is an interesting spot here. If you want to buy the dip, this is an interesting key spot to break to test here. And then you just have a stop out at the close below that 451.50 mark. But if you want to try the dip, yeah, it's an interesting spot. Not bad. And you got a squeeze that has ultimately started to fire short, but the weekly chart still looks good, still intact. I would just be careful with that 451.50 level. Oh, there was a question here. If there was one indicator, what would it be? All right, so y'all know that I have my system, right? I have my system. If you wanted to use one indicator and that was it, say if you had uh, price, sure. I don't even count volume as an indicator. It's price and volume go hand in hand with each other. So I would include volume with price. If I were to pick one indicator and only use one indicator, it would be the Ichimoku. And the reason why I say the Ichimoku is because it's a system in itself. So if you don't know what the Ichimoku is, the Ichimoku cloud system is really an indicator with three indicators, three or four indicators. I used to play with it quite a bit, and I actually still use it from time to time. Um, let's see, you can see that I have it on one of my favorites. Let's see, there you go. There's the Ichimoku. Let's turn off that. So what's good about this system is if you're above the clouds, that's bullish. If you're below the clouds, that's bearish. And then of course you got the Tenkan and the Seijin sign and all that fun stuff. But that's the gist of it. If you're above the clouds, that's bullish. If you're below it, bearish. So if you're below the clouds, you look for opportunities to short. If you're above the clouds, you look for opportunities to be bullish, to buy the dip. And you can see that here. You'll have to study it and get a feel for it, kind of do your homework. But the Ichimoku cloud system is a system in itself, and it's very beginner friendly. It is kind of slow, in my opinion. I think I spelled that right. It is kind of slow. And what you like about here is the clouds are forwards thinking. So it's also a what they call a leading indicator. It looks forward and it projects, and that's what this cloud over here is doing. Is that it is projecting that things are still pretty good. So if you're looking for a system in itself, watch the Ichimoku. It's hands down, it's very popular. Is I've used it. I still reference things, especially on swing trades, if we're where we are at as far as the Ichimoku goes. But yeah, it's a whole lesson in itself. I don't want to get into any detail. Does the gap mean anything? Like the red gets tight? Yeah, that means you're getting. So say if the red starts to tighten up and it starts to convert to green, that means that there's a shift going on. But usually when this happens, you should have a feel that things are turning bullish, anyways. So yeah, like I said, the Ichimoku, like we could spend like 2 hours talking about this thing. So you might want to do some digging there and research if you want to learn about the Ichimoku. Otherwise, we're going to be here for forever. My wife might get mad at me. Yeah, but I love this system, hands down. But the only thing I use it for right now is just to reference where we are. Are we above it or below it, kind of deal. You can day trade with it. It's just a little slow. But feel free to try it for sure. I actually used to day trade with it like back in the day when I first started trading in options, and then I switched systems to something a little bit more speedier. But it's great. Yeah, I love the Ichimoku. Check it out. Check it out for sure. if you want to know more info, if you really want to know some info, I'll sit down and write something up so you can get a better feel for it for sure. Are fibs indicators? Not really. It's a drawing tool. It's a mathematical drawing tool. Yeah, SMAs are indicators, and as always, most indicators are lagging indicators. Yeah, simple moving averages. That is a technical tool there. And the thing with moving averages, it's not so much, sure you can use the crossovers as signals, bullish signals, death cross, golden cross, whatever. But the main important thing is with moving averages is, are they sloping up? Are they sloping down? Are they crisscrossing like back and forth? Are they neutral? Are they stacked on top of each other, positive stacked? Are they negative stacked upon each other? That's the better way to use moving averages. What is the direction? Because what moving averages do is they smooth out erratic price action. And I always suggest people to use at least three. Use a short-term moving average that will quickly follow price. Use a medium uh, moving average that will be your reversion to the mean, and then have your long-term moving average, which follows the long-term trend of everything. So I always suggest having three. If you have more than three, it can get noisy, in my opinion. But I use a 21 EMA, and then I use a 50 and a 200 simple. I've narrowed it down to those that work best for me. All right, we are over time. Hope y'all got everything you needed out of that. Ready for the week ahead. 21. I use a 21 EMA. Here, I'll type it up. I use a 21 EMA, 50 SMA, and a 200 SMA. So those are the ones I use. Let's see. You're welcome. All right, sweet. Let's go ahead and end it there. I will get my watch list posted and we will take it from there. All right, guys. I'll see you guys in the morning and we'll be looking forward to the week ahead. All right, guys. Take care for joining us on social media. I appreciate y'all. Have a good evening. And if you have any questions, feel free to reach out, fuzz@stockdads.com, or check us out at stockdads.com. All right. Have a good evening. See you guys in the morning.